Test. Let me get it started here on Discord. Events. Awesome. Cool. All right. I believe we're live on Discord as well. So welcome everybody. Today is actually the 5th of May, Cinco de Mayo, 2025. My name is Spencer Riegle. I am the Chief Options Crypto Strategist and Trader at DARMA Capital Trading, and we hop on each week to do a quick stream kind of on the outlook for the week. We also talk about kind of a broader macro outlook and just generally talk about markets. Our focus for the most part is going to be within crypto markets, so Bitcoin, Ethereum predominantly. We do cover a lot of different cross assets, right? So we do touch on US equities, we touch on fixed income, kind of macro generally, but primary focus each week is going to be within Bitcoin and Ethereum. So without further ado, let's kind of dive into it. So as I said, my name is Spencer Riegle. You can follow me on X, so @_RIEGLE, or reach out to me on LinkedIn. Just my name, Spencer Riegle. Or I am pretty active in the Discord. If you pull up the Discord, the Bookmap Discord, and then you head over to our server within, our channel within the server, DARMA Capital, and then you'll kind of find the commentary, and then any questions you have, feel free to just drop them in there. So let's go through disclosures before we kind of kick it off this week. But general disclosure, all information in presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors, right? And so each week we like to start off talking about risk capital, right? And so anytime you sit in the trader seat, it's always about assuming risk and mitigating risk, right? And so as traders, we're also risk managers. That's kind of our primary job, because it's more important that we have a seat tomorrow than kind of that home run trade that everybody's kind of posting about and hollering about, right? And so every week we talk about risk capital. What is risk capital and what do we deem to be risk capital? Risk capital is capital in which you're willing to lose, right? And so if you're in the game of trading, there is events where you can lose all of that capital that you put to risk, right? Our job is not to make that happen. However, it is a game of risk reward, right? And so if that capital you need for bills at the end of the month, if that's capital that you need for groceries at the end of the week, it's not risk capital. Anything that is going to impact your life, even potentially your day-to-day, your quality of life, your, doing something fun on the weekend, it's not risk capital. Risk capital is capital that will not change your life if you lose it, right? And so we like to start off each week talking about that. Another piece, we talk about the website. So we rolled out the website this year. Reason which we're talking about it each week is we keep adding to it, right? And so this week we actually added some more, so I'll kind of go through that. But if you have any questions about who we are, this is our site. So dharmacapital.trade, go through the about section, go through all these pillars in which we offer. If you head over to the sign up, there is a free trader assessment and education. It's free of charge. Go through it, check it out. It's what we're all about, right? And so we see traders in a couple different buckets, right? Some of those traders do best discretionarily. Some do best in pods. Some do best predominantly within a systems-based trading strategy, right? So that trader assessment will tell you a little bit about yourself, but it also helps us understand how to best help you and interact, right? And so another cool thing that we kind of rolled out is, let me see what we got going on over here. So if we pull up the price map, we have it all kind of listed. Let me see, we'll do this. Actually, we'll do the live charts here. We'll pull up. There you go. So you'll see right here on the right side, we just launched our playbook, right? And so playbook is something that we use that helps define the market state, right? So in a bull trend correction, gives you a bit understanding of what to expect within this state, right? It tells you about the structure, right? So with the R level at the directional, it gives you a little synopsis on what the expectation is around that. No bias based on that, right? No directional bias. And so you'll see that the trade's been relatively choppy for the day. And then it'll come in here and it'll talk about some optimal themes for strategy, predominantly around the Delta 1 space. And then we even expanded it, and we're going to continue to expand it within the options realm, right? And let me, just so that you can see it on YouTube as well. So we're pretty excited about all this kind of stuff. So take a look at it. Let us know if you have any feedback. Drop it in the Discord, and I will get around to it. Or feel free to reach out to us on the contact within the site, right? So top right here. Without further ado, let me pull this up on the Discord. Yeah, without further ado, for those that are kind of new to the stream or just watching kind of a recording, we talk about tend to take markets in a top-down approach, right? So we think about bigger picture, and then we kind of just magnify it, right? So we go in a layer, and then go in a layer, and then we get into the microstructure, right? So in the macro, usually go over what's the last 7 days and kind of if there's any large events that's been going on. The answer is, again, no, really, right? And it's all on a relative basis, right? We're used to bombshells kind of dropping every day, every week. That really hasn't been happening. There's some kind of fundamental things within, especially the derivatives markets within Bitcoin and Ethereum, that are interesting, right? And some of those are, if you pull up an options kind of chain, you'll notice that implied vol in Bitcoin is incredibly low. Historically, it's low. It's low basically across the full curve, right? And so even if you pull up some of those March leaps, right, which would be those 2026 March, and you pull an at the money call, you're going to see that price is not what it would have been 4 months ago, 5 months ago, right? And so the volatility market as a whole has compressed, price has compressed, and the market's basically stating, the vol market's basically stating that it's okay. Taking a stance that we're going to maintain this range, at least on a 30-day basis, right? So to start the month, we just started May, which is important. That straddle was priced around $10,500, right? And so we opened up the month right around 94, which is kind of where we are right now. And that's basically saying that, hey, the market's going to trade nothing over 95.5 and nothing under 80, right? Which is that kind of large range that we've been trading in. On a historical basis, it's quite low, right? And so there are some theories that are kind of going around about scenarios of where that's going to get priced up, where that kind of will revert, all these kind of things. All I'm trying to note in that particular kind of larger term picture is volatility is cheap right now on a relative basis, right? Same thing with Ethereum. Ethereum vol bled towards the end of the week last week. However, we do have the upgrade, right? And Pectra upgrade is right around the corner. It's in 2 days. So that's front and center for Ethereum markets. The market couldn't really catch its feet, and we basically reverted back off the open of the month back to where we kind of started. So not a lot of price action that's incredibly interesting, except for the fact that if things do get to go, market's really not pricing it in, and there might be some trades in the horizon for that we can talk about in the future. So let's talk about after the event. So the event is 2 days from now. I was looking at the straddle this morning. May 9 straddles were basically 87 points. of the underlying, which is about 4.5% at the time in which I was checking it. Market's not terribly excited about it, not thinking that it's going to expand in a significant way. 30-day at the monies, the May 30s at the monies were basically pricing a move to around 2,000 on the call side. The straddle was around 246.5, right? And so not terribly excited on that side either. And so markets are okay within this digestive range and really just looking for that next catalyst. And so when we hop on each week, that's probably going to be the narrative in which we start talking about, is looking for what that next catalyst could be, right? Whether that's heading into Q3, whether that's a new news event, whether that's a new narrative, that's what we're on the lookout for. So let's hop over and take a look at the weekly outlook. So I'll minimize this and then I'll blow these up. And then let's make sure that we have Bitcoin on the Bookmap up as well. So for those that are unfamiliar with this black chart that I have on the left side of my screen over here that I'm showing, this is the weekly price map, right? And price map is our qualitative data. We use it to track markets. We're always adding to it. And then we are also using it to understand price as it kind of moves through a full price distribution, right? So each week in which we start with, and I'll blow it up because I want to make sure that we can kind of see the full value of it on the stream. So each week we start and we take a look at this directional number, right? What's the directional? Directional is that over-under number to give us that directional bias, right? There's two biases in which I want to touch on. One is directional and then one is sentiment, right? And so sentiment kind of defines the expectation of kind of that trend, that larger, what do we think potentially could happen over the next week and what's going to be supportive, right? And so under the directional, that's not seen to be a positive directional, under a directional bias, it's seen to be a negative or a cautionary tail in terms of the momentum is basically not there, right? So we open up the week, we start out a bit over it, 95,661.5. Immediately we try to break out. We're just kind of chopping around. We open up our weeks on Saturdays. That's when we see crypto open to start. So 0 UTC Saturday night in the US, right? And so kind of watching it. There was no real reason to sell it, right? It made a positive stance into the open of the month last week. However, Saturday night in US, which would have been into that Sunday UTC, we broke under the weekly directional. That's the first stance that says, look, market at the very least is at risk of not continuing what it did last week, right? And so that's a signal in itself to lighten up, right, on that directional bias and take a step back and say, okay, where are we at? What are we going to look at for continuation of trade? And then broader pictures, right? And so if it breaks under the weekly directional, where's it going to go? Weekly CR minus, right? And that's kind of what we did. We opened up the U.S. Futures yesterday, right? So equity futures opened up yesterday. And then we broke into the overnight, right? Into Monday open. And which is a normal digestive kind of trade. Back into this larger range over here, and just suggesting that we're in kind of a digestive stance right now, right? It's not incredibly negative because we're still over the previous month's close. You can see that PMC here, but it is stating that last week's momentum has a heat check and we're at least basing right here, right? So in order for us to really get our feet under us again, previous month's close has to hold, and it would be better if it held earlier on in the week versus kind of later on in the week. The reason for that is these levels kind of hold a little bit more validity earlier on in the session, right? And so right now, today is Monday. we're about 2.5 days already into the session out of a 7-day kind of basis. So if we base tonight and we continue to hold this previous month's close, that does open up trade back to basically a reversion of yesterday. And then really we need to base over the previous month's high, which is that 25,661.5 to that 25,900 area. We need a base over that to really take a stab higher. Otherwise, it's digestive, it's sloppy. The implied vol market's already calling for that, right? And that would feed directly into that narrative, right? And so let's talk about negative scenarios. So negative scenarios, we're currently in the start of one, right? And so if we hold the previous month's close, which is that basically that weekly CR minus, which we did today, it's positive, but it's digestive, right? If we break under this previous month's close here into the overnight, into Tuesday, right, and we take out these lows here, where are we going to go? The next level to take a look at is one, you can really take a look at that previous week's low, but more importantly, that 92 area, that 91.9, which would be that weekly DP. That would be a basically what we see is to be an average price map distance move, right? So that would be a normal impulse low. However, it would continue to feed the narrative that this is negative, right? If we can't hold this DP, right, that's not positive on the week, right? And where can we break to? All the way down to this green level, which would be quite a significant move on a weekly basis from what the straddle is already pricing in. So take it with a grain of salt, but it's absolutely possible under 92, right? And that's what's to look for, is that breakdown in price targets that 86. To the upside, right? Let's say that we base here, right here and now, right? If you look on the right side, we have some resting bids that are supportive of this recent low on today's session, sitting here around 880 coin to buy. Let's say that we trade around here. It's a little bit sloppy, but we get our footing in, and then we can base over this previous month's close, take a stab at 96, essentially 95,661.5 to 96,900. If we base at 96, just to make it super simple, that's very positive, and that really opens the door up to the end of trade on Saturday, all the way up to 99. We take out 99.5. Where are we going to go? 103. That's kind of that target, right? It would be enough of kind of that shake, psychologically that shake, right? A price to 97, base right back over 96 for that next impulse higher, right? Targeting 103.5. So that on Bitcoin is the outlook. Like to keep it super simple. So the green level being underpriced, that's positive, right? So that's our positive sentiment bias. So breaks are breaks to buy. However, it is to be cautious, right? Knowing that anything under the weekly directional suggests to us that through Saturday, it is at the very least a digestive positive trade, right? Under 92 really is the line in the sand to the downside to remain positive. If we can't hold it, don't fight it, because the expectation is we're going to break to 86. That's a fairly large break to be involved in, right? So here now, that's kind of what we're looking at. Let's take a look at Bookmap and see what kind of resting liquidity we have. So we do have a buyer here at basically, here, let me scroll out. Oops, sorry. 93,700, right? Which is in direct alignment with that weekly CR minus, but also with kind of today's lows, which is where we found a base and found a buyer early on in the session off the break. If the market is to remain good, the expectation is that level should hold to really open up for a potential extension into mid to latter half of the week. If it can't, right, then we do fall into that digestive narrative down to 92. You do have a willing buyer here at the previous week's low, so somebody's looking to get involved, maybe average down, average up, average down on their buys, and they're looking to do it at the previous week's low. Really, we're looking at 92. Bookmap is a little bit light down there, right? So on the upside, let's take a look at where the upside is. 97 on the upside. 97 on the upside is right in here. So if we do base over 96, 97 needs to be taken out. And that would be the expectation at that particular time, right? It's far away from price at the current time. So monitor it. It's only been sitting here in the book for this amount of time. So monitor it, make sure that it's still there. But relatively to the upside, the offer is light. So let's kind of toggle over here to Ethereum. Ethereum, again, is a bit difficult of a trade. I feel like that is kind of a broken narrative that we continue to discuss. We do have a positive catalyst in the next 2 days. The implied vol market is not terribly excited about it. It's priced in. It's there. However, it's not anything significant, right? So let's zoom out a bit here. Okay. So Ethereum on a weekly basis is it's pivotal here, right? So the green level being at the directional means there's no bias on the week in terms of a sentiment bias. And so it needs to be treated as such. Anything under the directional is not positive, it's negative. A break under this previous week's mid targets the previous week's low. That is pretty good alignment with the weekly CR minus. If we're going to break down from here, where are we going to go to start? 1745. It would be normal to test that previous week's low, get a little bit of sloppy trade around here, right? As kind of the market tests that range. If the market's really bad, it's going to break that previous week's low and take a look at the DP. DP is kind of that figure to look for. Either DP to the UP is what is considered to be a critical range, right? Critical range breakout would be normal. We see that to be a statistical norm. So be very cautious if you're buying the dip here at 1661. If we can hold 1661, where does it target? It targets right back to 1829, right? So that's a good reversion trade. However, knowing that Ethereum, for one, is the weaker of the two typically, or it has traded that way, and two, weekly critical range breakouts, and breakouts meaning a break of 1661 into this black area down here is normal statistically, would err on a side of caution. If the market is bad, right, and breaks under, you'll know by breaking under the previous week's mid. 1800 really should hold if it wants to have legs higher into the end of the week. If it can't hold 1800, and we'll probably know that in the next 12 hours, that's a reason to be concerned. Targeting lower, right? To the upside, 1800 is kind of that line in the sand that really needs to hold. 1830, a hold over 1830 is positive, and that suggests that momentum's here and that we have an opportunity to really take a stab at 1919, right? If we can get to 1919 and the market's good, targets 2000, right? But don't step in front of Ethereum this week, right? If we're going to hold 1830 and we're going into a positive environment where there's a positive catalyst, whether it be known or not, Ethereum's been beaten down so much this year that it is a moment of time. It's just a matter of time before we do get a sharp rally. That sharp rally would target 2100 is kind of that initial target, right? And so as long as Ethereum continues to base and doesn't really break down from the 1800s, it really does have an opportunity to continue to scale. And scaling in Ethereum targets initially 2100 for that target range to 2182, right? So that's kind of the outlook for Ethereum, both to the upside and to the downside. 12 hours, the next 12 hours here now. 1800's the line in the sand. A positive stance in the next 12 hours as a base over 1830, heading into the event for potential legs higher. If we're under 1830, but we're over 1800, it's really a non-stance. It's kind of more digestive. And then under 1800 is a reason to look for a digestive trade lower. So Bookmap is fairly light in the Ethereum book, right? So if you look, you have an 1860 offer here, about 11,000 coin, right? It's basically in line with last week's highs. It's front running it by 20 points. Makes sense, right? However, as long as the 1830 holds, then 1860 should be taken out, right? If it can't be taken out, obviously, in the moment, that's why Bookmap is incredibly important to use for the microstructure in the here and the now. But the expectation is if we can hold 1830, we'll take a stab at 1880, which is in that previous week's highs range. 1860, right? And it should take it out. If it wants to take it out, 1919 is that. And then if we can base over 1919, it skips up to 21 to 2082 is kind of that expectation. So that is the weekly outlook. Let me pull up the Discord and see if we have any questions. I typically keep them fairly short. And then open it up for questions, and then we can go from there. If we don't have any questions that kind of pop in the Discord, there was a couple questions asked this week in the Discord that were really great, so we can go over some of those as well to wrap up the session today. So I'll give it about a minute, and then if nobody's typing in the Discord, then I will run through the questions as well. Okay, cool. So don't see anybody typing, so feel free to type. But I'm going to run through some questions that were asked earlier this week that were really good. So there were 3 questions, and they kind of went in a numerical order. So we'll start with number 1, and then we'll kind of work down, right? And so question number 1 said, when you're in a trade based on the weekly price map levels and the levels update the following week while you're still holding, do you continue to manage the trade based on the original week's targets, or do you adjust to the new week's targets? How do you typically approach that kind of transition? It's a really good question because we see time a little bit different. So especially in crypto, we see a week to start at 0 UTC on Saturday and end at 0 UTC on Saturday, right? So basically 7 days of coverage. It's a 24/7 market. So we see zero downtime, right? In terms of rolling, in terms of all of these traditional aspects. And we see a continuous trade, right? And so absolutely you're going to be holding trades as you get new data, right? As you get a new weekly. And so how we use it is a little bit of both, a little bit of everything. So you'll see on my charts here, I actually have this smaller chart that kind of defines, this is our daily, right? And we support multiple different durations. So yearly, quarterly, daily, monthly, weekly, right? And so each of which kind of dictate a bit of the narrative and a bit more to the puzzle, right? And so the monthly obviously settles up on the month, quarterly, end of the quarter, yearly, end of the year, daily, every day, monthly, every month, and weekly, every week, right? The best trades often come in the terms of alignment, right? So when trade is aligned, right? So you get a daily directional in alignment with the weekly directional in alignment with the monthly directional, that is a very strong signal, right? Because everybody kind of trades on different durations. You can absolutely use them independently. However, it tells you a bit more. So let's kind of run through a scenario here. Let's pull up Bitcoin that we were just talking about, right? So Bitcoin, we were talking about that resting buyer that was sitting around 93,700, right? And that is basically today's lows. It's right in alignment with your weekly CR minus, right? That's all important, right? On a weekly time frame. Let's assume that the weekly time frame were to roll over, right? And what I can do here is, just for kind of our streams, I make it simple, but we can actually show last week's as well. Once we get new data, last week's data we don't use, right? So we don't use last week's weekly CR plus. We don't use last week's weekly directional. This is new data. This is a new week. We have to treat it independently and treat it as such, right? However, you'll see that we're at the weekly CR plus, and then we immediately went into the weekly directional. The weekly directional gives you kind of that context, right? And so if you're holding off the weekly CR plus, the market is supporting it. It made a positive stance last week, right? So we made a trade over, and we're just trading over the previous, over the weekly CR plus. Where is that trade invalidated? Under the new weekly directional, right? And so if you'll have a little bit of variance here, right? But trade holding over the weekly directional is still positive. The moment that it transitioned through it, that's your signal, right? So if you're holding long based on the market scaled last week, almost to the tick twice off the weekly directional, and your stance is the market's going to continue to scale, and you get a new data set here, and your weekly directional shifts higher, right? Well, that's your line in the sand, right? That's almost as if you were treating last week as the same as this week, right? So then you lighten up, right? And lightening up prevents profit give back all the way back to this digestive trade, which would have been the full last week's move, right? So that's one way to do it. Another way to do it is working trades. Let's think about working trades, right? So today, right, we're talking about this weekly CR minus, 93,700, 93,800. That absolutely matters. If it bases here in the next 12 hours and can take a stance over the previous month's close, that's positive because it targets immediately right back to the previous month's high, which is right in alignment with the weekly directional. And that would be positive, right? However, we can lean on some daily action, right? So the daily, let's take a look at the daily. Daily, your directional is right at 94,570 and a half, right? If we're under it, it's not great. If we're over it, right, it's positive, has the potential to scale, right? But because the R level, which is this green band, right, it always shifts, has a no bias. This also suggests that the market can be choppy for the session, right? So leaning over it is okay. We have a chance to hold the previous month's close, right? Which, let me see if I can blow these up on the screen just so that we can see them both next to each other. Over it, right, which is right in here, is positive. The moment that we break right back under, again, that's enough of a reason to lighten back up. Say, look, we might be in a digestive trade right back down to that Bookmap level. That's right here, 93,700. That aligns directly with that weekly CR minus, right? So it doesn't mean that you have to, if you're trading, let's say, one lot, for instance, it doesn't mean that you have to size up completely and trade the full one lot here, right? It means lean into it. So if all of a sudden you have half on and you're kind of waiting for this trade to go through, you can slowly add, right? Work the average as best as you can around the figure. But the moment that we break under the figure, you should be okay with lightening right back up, right? Because that's the market telling you that it's not ready to scale, and it's not performing to expectations, right? So those are two ways to use different time frames, but also use that rolling data in combination if you are caught with a position in data kind of migrates to the next session, right? And so we roll forward. The next question was, why is structure holding overnight considered to be important for confirmation? I think that this is an interesting conception or concept that a lot of traders have, and especially if you're in the U.S. and you're a U.S.-based trader, a lot of people think about trade as U.S. equities, right? So there's the regular session, which is basically 9:30 in the morning Eastern to 4 o'clock cash close, and basically 4:15. But and then there's the after-hours session, right, which trades in the U.S. equities market until 8 p.m. Eastern, and then futures obviously trade overnight, right? We see time a bit differently, right? And so absolutely we recognize the close, the cash close, all closes. However, just because trade happens overnight doesn't mean it's less of importance, right? There's actually some interesting statistics if you were to just buy the close and sell the open of the S&P 500. Over the last, 20, 30 years, you'd actually outperform in a significant way over just buying the open and selling the close, right? Which is super interesting. So just because it's an overnight session doesn't mean it's less importance of trade. All trade data is important, right? Just the futures market trades outside of what most would deem it to be a regular session, right? Your U.S. regular session. So those are all important. Those are absolutely tradable setups. There is a price, and you can execute there. So it's less about an overnight holding more significance. It's more that the overnight holding the same significance. And then in the last question, it said in last week we were talking about some statistics. So it said you mentioned statistically 83% of the time price action tends to hold between the UT1 and the DT1, right? Which found to be pretty interesting. Are there any other statistical insights? So we have done some internal studies, and we continue to do internal studies, and that's what we found in one of the internal studies, right? It was specifically within Ethereum, and it was within a daily, right? We were looking at some daily time frames just to understand normal range correlated to the price map, right? And so what we found was statistically a critical range breakout would be normal, right? So it actually happens more than half of the time. It skews slightly to more time. And then what we found within that data set was the range on top of that, right? So a standard deviation move outside of what we see as the critical range. And these critical ranges are not static. They update every day, and they change, right? And they're skewed, so they're not the same kind of difference, right? And so we found that to be incredibly interesting, and so when we talked about that on the stream, that's what we were mentioning. We also did a stream in one of the Bookmap streams where we talked on statistical normality and thinking about that. Statistics are great, historical kind of data is great for understanding a foundation, especially when you have a large sample size, and then you can apply sample sizes, right? Let's say during the Great Financial Crisis, right? Take a data set there and then apply it to what you think the future is going to be, or particularly, let's say 2017, when there was an incredibly low realized environment in the S&P, right? Those are all very interesting sample sizes to model around. However, one thing to always note is history does not have to repeat itself, right? And so that is where the discretion of the trader does matter, but it does create a decent foundation for modeling around and creating some decent risk-reward setups. So those are the 3 questions for the week. I do see some typing in Discord, so I'll kind of leave it open, and then we'll wrap it up. Yeah, so it said, what did you see on the recent crypto breakout? All right. Yeah, let's kind of pull it up. So I guess, let me ask you, when you say breakout, what breakout are you talking about? Are you talking about kind of last week's trade into 97 and then kind of the reversion from 97 back to 94? Or specifically last year when we kind of broke out of that 60 range in the elections to 100, or break back up to 90 plus. Okay, yeah, perfect. So, so we talked about it on a monthly basis. We kind of went through it, so you can run through some of the old YouTube videos as well. I was recording it on okay, cool. I was recording it on my laptop that time, so the streaming is not great, so I apologize for that. But let me zoom out here a bit and then we'll take a look. So specifically 83.5, I'm assuming up to 90 plus. So what we were talking about last month was 83.5 was an important figure to look at. The monthly directional, which also was the sentiment bias. So there was no sentiment bias last month, right, in April. And let me see if I can actually... and then we can actually pull this up so that we can take a look at it. Oops. Let's take a look at it on the weekly basis and we'll kind of go through it. But per period. Zoom in here a bit. Okay. All right. So what you're looking at is the price map on each of the weeks. So I'll share with you the monthly price map as well. So the monthly price map, it looked something like this. So the directional, which is this green level here, also aligned directly with the R sentiment. And so 83 was the line in the sand. And so that was all green light. So a base over 83 opened the door for the market to scale. Where was it going to scale? It was going to target the monthly CR plus, and then it was going to target the UP, right? And so on a weekly basis, which we cover each week here, it aligned same here, right? So the directional here, a base over 83, right? Or sorry, 83 was back further. 83 was down here. So monthly directional to the tick was down here at 83. It was a little sloppy on the weekly session that week. And then all of a sudden you got the base and go into the end of the month, right? And so it was a macro theme trade that we were kind of talking about. So when we talked about the agenda at the beginning of the session, one thing that we talked about during that week was Trump was going after Powell, right? And so that created some instability within dollar assets, and folks were looking to kind of divest, and that was the trade. That was the theme of the trade. So gold was on a tear, and then Bitcoin obviously got some spillover after the fact as well, right? And so that was kind of the macro backdrop, and so that was supportive of trade, and then all of a sudden you got the turnaround out of Trump after he realized that larger market participants were a bit concerned about that rhetoric and him going specifically, and the Fed's independence. And so then you got that price up, right? And so over the weekly directional here, it was sloppy here. Remember that the green at the directional can be one of two things, right? Sloppy trade or a very large move, right? And so we got 1 week of sloppy trade, which we kind of talked about in Ethereum this week. It potentially could be a sloppy week, or don't fight it if it wants to make a move, right? And so making a move means it makes a stance over the directional, and it goes to the CR plus, right? And that CR plus is that brown level there. I want to see. Let me see. I can. Okay. Yes, you can see it on Discord. So it's stabilizing here, targets the UP, right? This is considered to be a UP breakout, right? And so we kind of talked about statistically UP breakouts on a weekly basis are actually common. Where do they go? They target the UT1, right? The stat in which we just kind of talked about that we just went over, where the 83% on the daily also aligns fairly well and fairly decent on a weekly. It's not the same 83%, just to be clear, but that's your target, right? And so once we got and obtained that target, that's a reason to say, okay, market can digest, right? The easy money here, which is essentially from this level to this level, is done. And it's a reason to kind of lighten up and to think about more of a digestive sloppy action for the session. I wrote a piece actually on kind of how to mix volatility with the price map. So 95 last month was the monthly CRX plus. What I have found, kind of running through historical volatility trends and how we see time, we look at time on a monthly basis in a 7-day segment. The last 7 days of trade, typically on a realized environment, tends to fall off, right? And so it aligns specifically with a lot of statistics on a weekly basis, right? So 95, we continue to talk about as that overhead number, and volatility patterns, right? Or I guess you can call them seasonal, but they're more on a monthly basis, right? So the last 7 days of trade, and then it aligned on multiple different time frames, right? So not just the monthly, it aligned on the weekly, it aligned on some dailies, it aligned on larger time frames as well, right? It was a good natural stalling point, right? And so that was the expectation, was kind of a stalling of trade into the end of the month, last 7 days. So we got this price up, which historically day basically 14 to day 24 is a higher realized environment on a 7-day basis, and then the last 7 days kind of falls off, right? So that's how to play it. So 95 was the overhead, and then we just got choppy. So the easiest trade is was basically that base over here, and you can break it down. We oftentimes break it down into segments in which we call APMDs. So I'm showing half APMDs here, which is the brown levels. This is what we see price to move in segments, right? Like a ladder. So green to red, red to red. And then statistically, if it wants to outperform, it would go to the next red. We don't see that to be quite frequent. And then as we kind of head into May the 1st, this sloppy digestive trade is directly in alignment with volatility trends. And then we open up, right? It's not a coincidence. Take a look down here. May the 1st, we take a break into it, and then we expand, right? So there's a little bit of everything. Yeah, absolutely. I'm kind of going through the final draft right now, and then we'll post it up on the site. So we talk about it each week, but if you want to head over to the site, I'll post it up so you can head over to the Trade Vision, and we'll post it up in there. So here's a couple posts that John also wrote as well. That are really good. If you want to go take a look at some outlooks, it covers the ES kind of ES on a quarterly basis, which we are monitoring as well, as there are correlations within risk broadly. So I would highly suggest anybody that is watching this recording head over to the Trade Vision, take a read through this, because it's quite good. So cool. All right. Well, thank you for stopping by. I'm going to be in the Discord, so feel free to drop any questions in there. And then if you're watching the recording, come to the Discord, drop them in there, and I'll get to them when I am free off the desk, and then we can go from there. But I'll catch you guys all next week, and then we'll do same time, same place, and then and ideally we'll have some fun things to talk about. I'm going to keep my eye out for some new narratives around Ethereum outside of the Petra upgrade, that we can get these markets going again, outside of this compressive range. So enjoy the week. Good luck. And I'll see you guys next week.